there, and welcome to the Property Wealth Podcast. Today, we're diving into a really exciting topic, industrial real estate, specifically warehouses for e-commerce.
Yeah, it's such a hot area right now, especially with the boom in online shopping. If you're over 40 and looking to build long-term wealth, this could be a fantastic opportunity.
Absolutely. We're going to explore why investing in warehouses might be a smart move, the trends driving this market, and some practical tips on how to get started.
Right, and we'll also touch on some of the potential challenges that come with it so you're well prepared.
It's all about making informed decisions, isn't it?
Exactly. We want to give you the tools to navigate this space confidently and to understand how it fits into the bigger picture of real estate investing.
So whether you're just curious about industrial properties or ready to dive in, we've got some great insights lined up for you.
Let's jump right in, shall we?
Yes, let's. So, Mike, what's driving the demand for warehouses in the e-commerce sector?
You know, Sarah, when we talk about industrial real estate, especially warehouses, it's easy to think of it as just another investment option. But for people over 40, it's becoming increasingly relevant, wouldn't you say?
Absolutely, Mike. I mean, with the way e-commerce is booming, these warehouses are like the backbone of the whole online shopping experience. It's not just about buying something and having it shipped anymore. It's about how fast and efficiently that can happen.
Right, and for those of us who are thinking about retirement timelines, investing in industrial properties can actually offer some pretty solid benefits. You know, as we age, the need for stable, reliable income becomes more critical, especially if you're looking to supplement your retirement savings.
Yeah, and that's so important right now with inflation being a concern. Many people are feeling the pinch, and traditional savings accounts just aren't cutting it anymore.
Exactly. I've had clients who, just a couple of years ago, were heavily invested in stocks, thinking they'd ride the market up to retirement. But then, market shifts happen, and suddenly they're looking for more certainty.
That's a good point. I remember a story from a client of mine. Let's call her Lisa. She was approaching 50 and realized her stock portfolio was too volatile for her comfort level. After doing some research, she turned her focus to industrial real estate.
That's a smart move. What did she end up doing?
Well, she purchased a small warehouse in a growing area where e-commerce companies were starting to set up distribution centers. She saw the potential for long-term stability and cash flow. Now, she's not only generating rental income, but also benefiting from property appreciation.
That's a great example of how these properties can serve dual purposes, income and growth. I mean, as you mentioned, with inflation, having a tangible asset can protect you from those rising costs.
Exactly. And it's not just about the numbers, is it? There's an emotional component, too. Knowing that you have a solid investment that can support your family in the future, it gives you peace of mind.
Yeah, and thinking about wealth transfer is crucial for folks over 40. You want to build something that can be passed down to your kids or grandkids, right? Industrial properties can be a great asset to do that, especially as the demand for logistics and distribution continues to grow.
Right. And that demand isn't going anywhere anytime soon. With the trend of online shopping continuing to surge, warehouses are becoming more valuable. I mean, look at how people's shopping habits have shifted, even in the last few years.
Exactly. It's like we've seen a seismic shift in consumer behavior. And for investors, that means there's a real opportunity to capitalize on this trend.
And Mike, it's not just about the big players either. Small investors can find niche opportunities in this market. I spoke with a couple, Tom and Rachel, who invested in a smaller warehouse space. They were able to afford this property without breaking the bank.
Oh, that's interesting. What was their strategy?
They focused on partnering with local businesses that needed storage space for their inventory. It turned out to be a win-win situation. The businesses got the space they needed, and Tom and Rachel started generating consistent cash flow. Plus, they're now looking to expand.
That's a fantastic example. It just goes to show that there are various ways to approach investing in industrial real estate, and you don't need to have millions to get started.
Exactly. And even if you do have some capital, diversifying into industrial properties can provide a buffer against the unpredictable nature of other investments.
For sure. And for people over 40, having that buffer is crucial. It's about creating a safety net that allows you to feel secure in your financial future. You know, one investor I worked with told me, Mike, I just want to sleep well at night, knowing I have something solid.
That's such a relatable sentiment. I think many people share that desire for security, especially as they plan for retirement.
Yes, and it's also about adapting to current economic trends. With the job market evolving and more people working from home, the need for physical retail space is declining, while the demand for industrial space is on the rise.
That's a great observation. It's almost like a shift in focus for real estate investors. Those who adapt to these changes can benefit significantly.
Absolutely. And as we look ahead, those changes will likely continue. So staying informed and being proactive is key for anyone looking to invest in this sector.
So true. And I think it's also about finding the right properties and understanding the market dynamics. You can't just dive in without doing your homework.
Definitely. So as we transition into discussing core strategies for investing in industrial real estate, it's important to keep in mind these factors: the economic trends, the emotional side of security, and the long-term wealth-building potential.
Right. Let's dive into those strategies next.
So let's dive into some core strategies for investing in industrial real estate, particularly warehouses geared towards e-commerce.
Yeah, I think that's a great idea. Where should we start?
Well, one of the first things to consider is the location. You want to look for warehouses that are close to major transportation routes, like highways, railroads, or even ports. This makes it easier for businesses to distribute their products quickly.
Right, and I imagine the more accessible the location, the higher the demand, right?
Exactly. You can think of it this way. If you can get your product to the customer faster, it's a major selling point. Plus, areas with a strong consumer base nearby are ideal because they can support those quick deliveries.
That makes sense. What about the actual size of the warehouse? Is there a rule of thumb for that?
Definitely. A common guideline is to consider the 1% rule. This means that for a property to be a good investment, the monthly rent should be roughly 1% of the purchase price. So if you buy a warehouse for, say, $1 million, you'll want to aim for around $10,000 a month in rent.
That's a straightforward metric. But what if the warehouse is in a prime location?
Good question. In prime locations, you might get away with slightly lower returns, but you'd want to ensure you're still within a reasonable range. Maybe 0.8% could be acceptable if the demand is high. Just keep an eye on market trends.
Got it. And what about the types of tenants? Are there specific industries you should focus on?
Yes, e-commerce is huge right now, but also consider logistics companies, manufacturers, or even last-mile delivery services. These tenants tend to have stable cash flows, which is what you want as an investor.
And what about evaluating the property itself? Are there checklists or things to look for?
Absolutely. I'd recommend a deal evaluation checklist. Start with the basics. Check the age of the building, its condition, and any necessary repairs. Look at the zoning laws, too, to ensure the property can be used for your intended purpose.
That's really practical. What else should be on that checklist?
You'll want to assess the layout and functionality of the space. For example, does it have enough loading docks? Is there sufficient ceiling height for storage? And also check the access points for trucks and vehicles.
Right, because if it's hard to get in and out, that could be a deal breaker for potential tenants.
Exactly. You'll also want to evaluate the financials. Things like the current lease agreements, operating expenses, and historical occupancy rates. This will give you a clearer picture of cash flow potential.
Speaking of finances, what about financing options for these types of properties?
There are several ways to finance industrial real estate. Traditional bank loans are common, but you might also consider SBA loans if you qualify. They often come with lower down payment requirements.
That's great to know. Are there any alternative financing methods?
Yes, like private investors or crowdfunding platforms. You could also look into seller financing, where the seller allows you to pay in installments. It's worth exploring all options to find what works best for you.
And how do you evaluate the cap rate on these properties?
The cap rate is a measure of your return on investment. It's calculated by dividing the property's net operating income by its purchase price. For example, if your warehouse generates $100,000 in net income and you bought it for $1 million, your cap rate would be 10%.
That seems pretty straightforward. What's a typical cap rate for industrial properties?
Generally, you'll see cap rates ranging from about 5% to 10%, depending on the market and property specifics. Lower cap rates often indicate higher demand and lower risk, while higher cap rates might suggest more risk or less desirable locations.
Ah, so it's all about balancing risk and return then?
Exactly. And you'll want to find properties that align with your investment goals, like whether you prioritize cash flow or long-term appreciation.
Right, and what about the 50% rule? How does that fit in here?
The 50% rule is a quick way to estimate operating expenses. It suggests that, on average, you should expect about 50% of your gross income to go toward expenses. So if your warehouse makes $100,000 annually, you might budget around $50,000 for costs.
That's a handy rule for quick evaluations.
For sure. Just remember, it's a rough guideline. Actual expenses can vary based on the property and location, so it's good to dig deeper when you're seriously considering a purchase.
And what about the market itself? How do you identify good markets for industrial real estate?
Look for areas with strong job growth and economic development. Population growth can also be a good indicator. And don't forget to analyze local policies that might affect industrial growth, like zoning changes or infrastructure projects.
So it's really about being informed and doing your homework, right?
Absolutely. And once you've done that, you can feel more confident in your investment decisions.
Now, we've talked about a lot of key strategies, but what about common pitfalls?
Ah, that's a crucial topic. Let's explore that next. You know, Sarah, one of the biggest mistakes I see new investors make is over-leveraging. They get really excited about a deal, and then they stretch their finances too thin, thinking they can handle the risk without fully accounting for the costs.
Absolutely, Mike. It's that rush of excitement, right? They see potential profits, but often forget about the potential pitfalls.
Exactly. I had a client once who bought a warehouse, convinced that e-commerce was booming, and he thought he could finance it with minimal down payment. 6 months in, he was struggling to make the mortgage payments because he hadn't factored in maintenance costs, vacancy rates, or even property tax increases.
That sounds tough. What did he end up doing?
Well, he had to sell the property at a loss. It was a hard lesson, but it taught him to always calculate not just the upfront costs, but also the ongoing expenses, and to have a cushion for unexpected issues.
Right, that cushion is so important. And speaking of unexpected issues, bad tenants can really derail an investment too, can't they?
Oh, for sure. A bad tenant can turn a dream investment into a nightmare. I remember another investor who secured a warehouse lease with a tenant that seemed perfect on paper, but within a few months, they were behind on rent and causing damage to the property.
Yikes. Did they do any background checks?
They did a basic one, but it wasn't thorough enough. They missed some red flags, like a history of evictions. It's crucial to dig deeper and really vet potential tenants.
So what do you recommend for someone looking at tenants?
Well, I always advise doing a full background check, including credit history, past rental experiences, and even speaking directly with previous landlords. It's worth the time and effort.
That makes sense. And what about cash flow? I know that's a biggie too.
Yeah, cash flow is king. Some investors underestimate the importance of consistent cash flow. They may get caught up in the property's potential appreciation and ignore the fact that they need to cover their expenses month to month.
Right. If you can't pay your bills, appreciation doesn't really matter, does it?
Exactly. I had a colleague who bought a warehouse in a hot market, banking on its value increasing. But the property was hemorrhaging money every month due to high operating costs, and before he knew it, he was in a tight spot.
That's a real wake-up call. How can someone avoid that situation?
It's all about understanding your numbers. Create a detailed budget that factors in all expected income and expenses, and always plan for the unexpected, like maintenance costs, insurance, and even seasonal fluctuations in rent.
That's such solid advice. You know, I've heard people say they'll time the market, waiting for the perfect moment to buy. What's your take on that?
Timing the market can be like chasing a mirage. It's nearly impossible to predict when the right time to buy is. I've seen investors wait and wait, thinking prices will drop, only to miss out on great opportunities.
So you're saying it's better to focus on finding the right property rather than trying to predict the market?
Exactly. Look for properties with strong fundamentals. If the numbers work, don't get too hung up on timing.
And hidden costs, Mike? That seems to be a sneaky pitfall, too.
Yes, hidden costs can be a real trap. Many new investors overlook things like closing costs, property management fees, and even renovation expenses. I had a friend who bought a warehouse, thinking it needed just a little cosmetic work.
But
But once he started, he found major structural issues that required a lot more money and time to fix. He didn't budget for that, and it set him back significantly.
ouch! So how do you spot these hidden costs early on?
Always get a thorough inspection before buying and consult with professionals who can help you identify potential issues. A good inspector will look for red flags that can save you a lot of headaches down the line.
That's really helpful. It's like having a second pair of eyes on your investment.
Exactly. And don't be afraid to ask tough questions during the buying process. If you sense something's off, dig deeper. Trust your instincts.
So to sum it all up, we've talked about avoiding over-leveraging, being cautious with tenants, ensuring solid cash flow, not trying to time the market, and being aware of hidden costs.
Yes, and implementing those strategies can really set you on the right path. If someone finds themselves in a tough spot, it's essential to take a step back, reassess, and figure out a game plan moving forward.
Great advice, Mike. It's all about learning from the past and not being afraid to pivot.
Exactly. Real estate can be a fantastic investment, but it requires diligence and a willingness to learn from both successes and mistakes.
And for those who are just starting out, remember, it's a marathon, not a sprint.
Couldn't have said it better myself. Taking your time, doing your homework, and being patient really pays off in the long run.
So what's next for our listeners?
Well, I'd suggest starting with some education. Read books, listen to podcasts, and maybe even reach out to a mentor. And once you feel ready, start small. Maybe a single warehouse or a smaller property before scaling up.
That's a great plan. It's all about building a solid foundation, isn't it?
Absolutely. And remember, every investor has made mistakes. It's how you learn and grow that truly matters.
Wise words, Mike. Thank you for sharing all these insights today.
My pleasure, Sarah. I hope our listeners feel empowered to take the next steps in their real estate journey.
Definitely.
So, Sarah, when it comes to getting started in industrial real estate, there are some really practical steps people can take right away.
Absolutely, Mike. I think the first thing that comes to mind is doing your homework, right?
Exactly. One of the easiest ways to start is by checking out platforms like Zillow or CoStar. They can give you a good sense of property values and trends in your area. You can also look at commercial listings to see what's available.
Right. And speaking of tools, there are some fantastic calculators out there, like the Bigger Pockets calculator or Deal Check. They help you analyze potential deals more effectively, which is crucial.
Yeah, those calculators are game changers. They can help you understand cash flow, ROI, and much more. And don't forget about Rentometer, especially if you're looking at mixed-use properties or any situation where rental income is involved.
So true. And if someone's just starting, I'd recommend they analyze, say, one deal a week. It doesn't have to be a huge warehouse, just something to get your feet wet, right?
For sure. And while you're at it, consider joining a local meetup group focused on real estate investing. It's a great way to network, learn from others, and find potential partners.
I love that idea. It's also a way to stay motivated because, it can feel a bit isolating if you're doing this solo.
Exactly. And while you're networking, don't shy away from seeking mentorship. Finding someone who's been in the industry for a while can provide invaluable insight.
Absolutely. And you could even check out podcasts or books dedicated to industrial real estate. There are so many resources out there.
Definitely. I'd recommend books like Commercial Real Estate Investing for Dummies and the ABCs of Real Estate Investing by Ken McElroy. They break things down really well.
Ooh, and podcasts. There are some fantastic ones, like Bigger Pockets podcast and The Real Estate Guys. They dive into different aspects of real estate investing, including industrial properties.
Right. And I think one of the most important habits to develop is to stay curious and keep learning. Even if it's just dedicating a little time each week to read articles or watch videos on e-commerce trends.
Yeah, staying updated on industry trends is key. It's amazing how fast things change, especially with technology and consumer behavior.
Exactly. And speaking of tech, using local MLS access can really help you identify potential properties before they hit the broader market.
That's a great tip. And, if someone doesn't have access to MLS, they could always partner with a real estate agent who does.
Absolutely. Collaboration can open many doors. Plus, it's often easier to navigate the complexities of commercial deals with someone who knows the landscape.
And remember, it's all about starting where you are. Even if you feel overwhelmed, just take that first step. Like identifying a property type that interests you and diving deeper into that area.
Yes, every small step counts. And as you build your knowledge and confidence, you can gradually expand your scope.
Right. So with these tools in your pocket, you're ready to move forward. Let's recap what we've covered today.
So as we wrap up this episode, let's quickly recap some key takeaways from our discussion on industrial real estate and warehouses for e-commerce.
Absolutely. One big point is the growing demand for logistics and distribution centers, right? With online shopping booming, these properties are really becoming essential.
Exactly, and that ties into the second takeaway, the potential for long-term value. Investing in warehouses can provide stability and consistent returns, especially in today's market.
Right, and we can't forget about location. Finding properties near major transportation hubs can really boost their appeal and value.
Yes, and let's not overlook the importance of understanding lease structures. Triple net leases, for example, can minimize your management responsibilities while providing steady cash flow.
Definitely. So it's all about doing your homework, knowing the market, and being strategic with your investments.
And remember, building wealth through real estate isn't just a dream. It takes time, patience, and the right strategy. Anyone can do it, especially if you start with the right mindset.
Exactly. If you found this episode helpful, we'd love for you to like and subscribe. And hey, drop us a comment. What was your biggest takeaway? Or do you have a question about what we discussed today?
And share this with someone over 40 who might be looking to invest in property. We want to help as many people as we can on their wealth-building journey.
For sure. And just a little teaser for our next episode, we'll be diving into retail strip centers and discussing some recession-proof tweaks you can implement.
That's going to be a great discussion.
So until next time, keep investing wisely and stay curious.
Take care, everyone.
Bye.